there was only one person doing one job, the plan would work through that job. If there's just one light bulb, I can show how much you're going to save on that, and how, over this many years, how much that individual light bulb will save. Because in creating an asset-based economic system, every light bulb becomes a coin, not just a regular coin that has a static value, it has a dynamic value into the future because it's either making or saving energy. By doing that, we can refinance these memberships, because I don't call them leases, because with a lease you have tax situations and stuff. I call them memberships. We take the amount of savings, and that's their membership fee, and we charge it to them for the month. And they're buying a membership in light, or a membership in energy, or a membership in whatever technology that we have that fits our criteria. From the standpoint of the management side, we create all the documents in transactional forms and the websites that people can play and create their own shop.
Okay, yeah.
And that shop is a finance shop, contractors, all the different consultants. That's what the estimators are, is just in consulting. The whole deal there to get the bid, and then you get the contractor, and then you buy the product. Those are handled by the contractor and those three in that unit. And then in marketing, you have the membership coming through call centers, referrals and things like that. There has to be a referral system on that call center too. Now, if you look at the call center, $100 to be a member is a registration fee, but to actually get the lights creates that membership lease situation where we put the product in the building or on the street or wherever. At that point, they have a membership, and that membership is not on a person. That membership, in this case, is on the lights themselves or the technology itself. There's a contract based on that real estate, which follows an escrow. That escrow is opened by the financial manager who pays the contractor to do things that are listed in the escrow instructions, as to put in lights here and do this, and hold your performance bond for 5 years. So the escrow doesn't actually close, but when we're dealing with advances, we can advance money out of an escrow, because an escrow is a commercial contract that has things that have to be done in order for things to be completed. But during that escrow, you can write instructions on what to do with the money. You can have it go into interest-bearing account. You can have it advance to the seller or anybody in the system, to the contractor or anybody else. And you can advance it to them because it's an advance. It doesn't have tax liability. And so in that type of position, when we wash out the lease, we can pay them out and then they pay taxes at that point. Or we can actually have them just release the contract and have it go back into the S&P. We're creating a system that is going to challenge the tax system by us just not participating in it. And there's nothing illegal about it. People get a little scared when you're looking at this level. They should be more scared with everything that's going on. There are so many laws and situations, like in Europe, and with the euro, you can't operate a regular business anymore because all the laws contradict other laws. And that's happening here as well. We have to be a lot smarter than the legal system by not participating in it.
Okay. So with that being said, is there like a cheat sheet to how things need to be set up on an independent basis in order to participate with this?
It's just going to be the way the system works. As a contractor, create work, project value in that. You just get paid out in a normal kind of way from your vantage point. From our vantage point, we're paying you through self-liquidating loans where we never touch the principal, and all the money goes into the modernization system. We're using the money that the individual has created by his work and then adding to it on the top end so that we can actually use that as an income source and use the payday advance loan system to do it. Because charging somebody's account with your own money adds to that, because there's a return on that capital because we allocate it to an account. If we don't do it that way, we can just pay out the money we earn through the finance manager And that's the way we're going to do it primarily. It's just a very straight, standard way of, here's your check. Here's a 1099. But I rather not do 1099s as a company. The cooperative is not going to pay anybody, and it's not going to earn any money. Everything's going to be a deposit that goes in the shared equity pool that earns collective funds for modernization. That's its purpose. When a modernization is completed, the finance manager who's running the escrow and all the accounts on an individual project will allocate a certain amount of funds towards the payment of that account. And those funds could be more than the individual is actually receiving, so that the money can be held in self-liquidating accounts by receiving interest on those funds. In so doing, instead of what's being come out as just a cash advance in a 1099 to a contractor, it comes out as what it would be a loan, as an advance on the escrow, because the job's not done. Did you remove the lights yet? No. Okay, they're still working. Well, how can I get paid? Here's some money. Well, this kind of looks like a loan. No, it's not a loan. It's advance on what you have on your account. Do I have to pay taxes on it? I don't know. If you look at what the laws are on an advance or income or different things like that, an advance could be considered income. But when you go to a payday loan place, which are basically institutionalized all over the country and charge 400 to 500%, we can run the same system through a payday loan company for people with a 0% interest.